Hey guys, it's Andrew Keene from KeenOnTheMarket.com. This is your S&P 500 daily recap for February 3rd, 2012. It's interesting that people put on the TV and they look at the market and they be like, oh, the market's up 150 points. You know, S&P is up 15 handles. Trading must be crazy. You must be making so much money, so much movements. But the fact of the matter is the daily ranges in intraday in the American sessions or the non-Globex sessions are really small and they're really tight and they're very hard to trade. Today, let's look at the daily chart to start. You know, we had this sell-off towards the end of January, and then February, 3 straight bull days. Again, we're back on this bull path. I flagged it that if we can get through this 1329.75 with conviction, we can pop much higher, 1340. We traded up to 1342 today. I've been talking about it, guys, for a while. You got to go to the blog. My target is this 1347.75. We're only about 5 handles away now. And then the ultimate target is this 1370 level, which is the Bin Laden high. So on the daily chart, you know, we do look strong once again. You know, we had a couple sell-off days, but for the most part this year, the market's been very strong. Let's go to the 5-minute chart. Look at today. We came in this morning. We opened at 1335.75. We sold off a little bit. This is right to our fib zone. This is a buy right here on the close of this bar, and you'd have to risk to probably a point under this bar. So if you bought this, it would have kept you all in all day. However, you look at the low, it's 1333.25, which is higher. We gapped up higher, and I talked about if we gapped up higher above the 1330 level, it's off to the races. So we did get a little bit of a double bottom here off this fib level. If you want all the key levels, you have to go to KeenOnTheMarket.com. And then we were rallying all day. To be honest, though, if you look at it from about 9:30 till 3 o'clock, we are in a 4-handle range. That's unbelievable. We hit the weekly pivot resistance too. So those are the blue shaded areas are always yesterday's level. And then we put in the dotted lines for the levels we're looking for Monday, February 6th. We have for Monday, we're looking at the floor pivot, which is 1339-ish. And then we have the black level, which is today's low, which is 1333. And this can be kind of a line in the sand. Like if I want to be long any futures or I'm holding a position, I can say 1330 is my level in the sand. If we dip under that, I'll get out of some of my position. Because it took a while to break through that, but we broke through it. What does the resistance become support? So this could be your stop out level for a long. And then we have the blue area, which is another key level. That's going to be the point of control for Monday. So I think it's, you know, we're going to get more positive momentum. I do think this market is overbought. However, that you cannot make money selling in these rallies. I talked about it, that the only way to make money is to be buying dips. So I've been long. I've been taking profits on the whole way up. I am still long. However, I am less long than I have been. And this is probably the less long I've been, but I am still long. This is Andrew Keene from KeenOnTheMarket.com. Remember, if you want all the S&P 500 levels, you have to go KeenOnTheMarket.com. Resistance levels, support, Fibonacci levels. And have a great weekend. Keep an eye on 1330 to the downside. That will play huge. 1330 to 1332. And the target of 1347. The real target is up at 1370. The Bin Laden high. Have a great weekend.